one of the currencies around the world, and I mean every one, has fallen dramatically against gold and silver over the past 12 years, and they will continue to do so until the Ponzi scheme, which is fiat currency, ends. There's really no way of knowing how fast that will be. My sense is we're very close because the level of debt in the world is now rising at an exponential rate, and it's getting more difficult for the central banks to print money without causing hyperinflation. We are seeing in other countries right now dramatic rates of inflation, and I think we're going to see that start to spread around the world in the next year or two. So just, again, think of it more in terms of a bear market in currencies than bull market in gold and silver.
Okay, thank you. Andy Schectman, anything that you would like to add?
I think Andy said it as well as could be said.
Anyone could? All right.
I couldn't agree more. This is all about confidence or lack thereof in currencies.
All right, let's go on with the next question. Deborah is asking, if purchasing through your company, do you or are you required to report our purchases to the government?
I'll take that. This is Andy Schectman. As far as reporting is concerned, when you buy gold and silver or platinum or palladium in any dollar amount, period, as long as you are writing a check or sending a wire, there are no dealer or personal reporting requirements, period, either by you as the consumer or whomever you're buying the metals from. You can purchase with cash, green cash, hard money, up to $10,000 per transaction with no dealer reporting requirements. If you spend $10,001, then there are reporting requirements, and they have to do with the amount of cash being given on a particular transaction. However, as a caveat to that, you can make as many non-related purchases up to $10,000 as you would like in a given year, as long as the transactions are not related and as long as it's not conveyed to the dealer that your intentions are to hide money and to avoid paying taxes and things like that. So if you just call up a dealer and say, call up Miles Franklin and say, we want to buy $9,500 worth of gold in cash, you could do the same thing 6 days later, same thing 10 days later, same thing 2 weeks later. And that's completely and totally legal. But in general, if it's a check or a wire, in any quantity, there's never any dealer reporting requirements at all on purchase.
If I could add actually a question toward you, Andy, aren't there certain states that recently announced that you have to have your photograph taken or your fingerprints or something when you're buying from coin shops? I know Minnesota that's not the case, but I do believe that this is something that's come up recently, if you could comment on it.
Yeah, I heard about that, and I think it might be Florida. I'm not sure what state it was. It hasn't impacted the coin market on a dealer level. It may on local mom-and-pop coin shops, and to be honest with you, I'm not exactly sure which state. But when you sell, there are reporting requirements and we should talk about that because that's real important too. When you sell, let's just talk gold and silver. If you sell gold, there are 4 items that trigger dealer reporting requirements. And they are Krugerrands, Maple Leafs, gold bars, and Mexican 50 pesos. Those 4 items on the 25th ounce trigger dealer reporting. So once again, you don't want to call a dealer and say you have 700 Krugerrands and you don't want to do any reporting and sell 24 every day. Then the dealer would be should know better, and a suspicious activity report form should be filled out. However, you can sell 24 Krugerrands today and 24 Maple Leafs tomorrow and 24 gold bars a few days later, and then repeat the same thing a few weeks later and sell as much as you want of those 4 items up to 24 ounces at a time with no dealer reporting. On the 25th ounce, there is any other form of gold that you sell. There are no dealer reporting requirements on sellback, whether it be the old numismatics, any of the new American coins, Eagles and Buffaloes, Austrian Philharmonics, British Sovereigns, Swiss 20 francs, you name it. No dealer reporting requirements on buy or sell in any quantity if paid for by a check when you buy, and if sold, those items, those 4 items excluded. In terms of silver, the only reporting requirements on silver are levied on bars or rounds and on junk silver. Bars and rounds on the 1,000th ounce. You can sell up to 1,000 ounces, up to 990 ounces, let's say. No dealer reporting. You sell 1,000, Social Security number is needed. And with junk silver, it's commonly sold by face value. A $1,000 face value bag, like 4,000 quarters or 10,000 dimes or 2,000 half dollars. When you get to the 1,000th dollar face value, Social Security number is needed. Once again, here you can sell a half bag at a time, and as many as you'd like over time, non-related, with no dealer reporting. So other than that, you know, if I were selling my gold and silver to a local shop, Andy Hoffman, and someone asked me for my Social Security number or my driver's license or my fingerprint, I would turn around and walk away, and I would just box things up and send them back to a company like ours by registered mail, because one of the real beautiful things about gold and silver is that it is private and it is liquid, and so far so good when it comes to the overall privacy. So with us, you don't have to worry about providing any of that information if you just want to sell a couple of coins.
And one last question on that topic. Someone is asking, they had always thought the NGC MS-61 coins were non-reportable. Is that correct?
Whether the coin is graded or not, those coins aren't reported. The NGC or the PCGS, the NGC stands for the Numismatic Guarantee Corporation, and PCGS, the Professional Coin Grading Service. Those two companies don't do anything other than grade the coins. So you could have an MS-61 or a circulated VF-30 in the same date, and there are no dealer reporting requirements. The only coins that trigger reporting on the 25th ounce are Krugerrands, Maple Leafs, Mexican 50 pesos, and gold bars. Those 4 items and those 4 items only. Nothing else triggers dealer reporting. It's often been, you know, I'm not trying to get off track here, but I think it's worth noting that this is an industry that's non-regulated, and there have been a lot of companies over the years that have told half-truths to have their stories seem legit, to push people into buying high-graded, expensive numismatics by telling half-truths. And if I were to say to someone, well, you know, MS-61 $20 liberties are not reportable, both buy and sell, that's a half-truth. It's true, but it's not the whole picture. So are a whole bunch of other coins, anything but those 4 items on the 25th ounce. So it's just important to do a little due diligence and call with questions before someone tries to talk you into something that you're not quite sure of. Next question. Hello?
I'm sorry, I had my phone muted. The next question is from Bill, and he is asking, what about applicable sales tax on gold or silver coin purchases?
When you purchase from us, there is no state sales tax. If you're in the state of Minnesota and you came into my shop and paid me money and I gave you product, I would be required to charge you state sales tax. That is the law. So in other words, when product, at least in the state of Minnesota, some states are different. The state of Minnesota, when product and money are exchanged in the state at the same time, then a sales tax is due. So what happens if you're in the state of Minnesota, you send your money to a dealer, our wholesale division in North Dakota. The product is then shipped directly to your home. There's no state sales tax. If you're in any other state in the country, or for that matter, even other various countries that we ship to, there is no state sales tax charged whatsoever. So the only time state sales tax is ever applicable is if someone comes into the office, purchases product and exchange money, then sales tax is charged.
Okay, thanks. Next question is from Johan. The question is, how can we keep up with the availability of gold and silver as this reaches a little more mainstream stage?
If he's talking about in terms of the product availability, is that correct?
I believe so, yes.
Well, I've said all along that the lack of product, or the lack of product availability, will define the marketplace perhaps more than anything else. And when you realize that there is no bull market like a gold bull market because it speaks to people's concern rather than to their greed, the higher the price of gold goes, and more importantly, the scarier the world becomes, the greater the incentive and the greater the reinforcement of the motivation that people employed to buy the stuff to begin with happens. And so what we are witnessing currently, and have been for quite some time, is really the lack of a secondary market, meaning most everything that you buy is brand new 2012. And when things get really crazy like they did in 2008, things can disappear overnight, and that's what I've learned. And so keeping track is a hard thing. In 2008, when the price of gold fell from 1,000 to 700 in a period of 3 weeks, and silver from 21 to 9, one would think the market would be flooded with supply as the price of something is plummeting that has to be a weak demand. Well, it was only COMEX derived and paper manipulated, as Andy could talk about, because on this side, when you talk about the physical product, when that happened, in a period of less than a week, every major mint was out of product. Every major refinery was out of product. The U.S. Mint had shut down 8 or 9 times that year with lack of product, and to this day still has not made a platinum eagle. The Canadian Mint was 16 weeks back ordered, as was the Austrian Mint, which was working 24 hours a day. The South African Mint, for the first time in almost 50 years, ran out of product as one wealthy businessman cleaned them out. And the Perth Mint in Australia shut down in around August of that year, took no new business. And back then, it went from normal business to within a week or two, people having to pay up front and not get their product for at least 10 to 16 weeks. I mean, it varied depending upon what they were buying or who they were from, who they were buying from. But it happened so fast that it caught everyone in the entire industry off guard and blindsided them. The thing that I took away from that more than anything is that the precious metal supply chain is about as fragile as can be. And so getting the product while it's available is every bit as important as getting it at a good price, because it doesn't matter what you pay for it if you can't get it. So I guess all you can really do is keep reading our newsletters and call us as much as you'd like. And right now availability is good, but I don't expect that to last. I really don't. I think it'll be the opposite before this is over.
And I'll introduce a key word into this discussion, and that is elasticity. Because of what Andy's talking about, whereas the majority of this bull market is derived by fear, not greed, gold has the unique property of being inelastic, meaning it does not go down in demand when the price goes up. In fact, historically, it's been the opposite, because, as Andy's saying, the higher it goes up, the more people are scared. And conversely, the lower it goes down, the more people realize that it's not a true price. So for anyone who believes that silver was $8 an ounce back in 2008, rest assured the real price, as Andy will tell you, was somewhere around $16, $18. Again, it never was $8 an ounce. The only place it was on paper desks, manipulated, and actually if you looked up in the later stages of that meltdown period in early 2008 and early 2009, gold and silver rocketed back. So again, supply on the downside is going to be equally strong as the upside. We've seen not just in 2008 period where supply ran out. We also saw it last year. In fact, we'll have the year anniversary of the Sunday Night Silver Massacre. That's going to be next week. And when so when we were at April 25th of 2011, Andy will tell you that all the mints were out as well. I remember looking online and finding nothing unless you wanted to pay $65 an ounce for silver. So
yeah, there's no question.
We've had it on the upside. We also had many shortages back in September of last year and December. In fact, we had some of our busiest days of 20 years of business back in the fall. So you're going to see it on the upside and the downside. My expectation is if somehow silver goes below $30 here, we're going to see the same kind of physical response as we saw last time. And, people, it's a herd mentality. Right now at $30, no one wants it. And then all of a sudden they look up and they're desperate to get it at 35. So, again, it's not about investment. We are not investing in gold and silver. We are saving our wealth. We are transferring our paper money into something that's worth something. And if you pay 35 for it or 30 or 25, frankly, in the big picture, it doesn't matter. Because in the big picture, per the first question, you are going to see continued declines in all of the currencies of the world, including the dollar, and you're going to be happy to have ounces.
There's no question when the price drops, the business in the entire industry goes parabolic. One of the things I talk about a lot is, are you waiting for a pullback? And that pullback is what most people are waiting for right now. They're waiting because of the uncertainty surrounding the election year. And everyone's waiting for the shoe to drop. And as Andy Hoffman mentioned, that's right. When silver did drop below $9 an ounce, Silver Eagles were trading at almost 100% premium, and you'd wait at least 10 weeks to get them. You'd pay $18, $19 for them. Junk silver, which I can sell right now for maybe 50 cents over spot per ounce, was selling at $4.50 and $5 an ounce over. So we've noticed that over the last couple of years, when the price drops, two things move inverse of it, and that is premiums and delivery delays. And so I guess it's because of people like Andy Hoffman and my father who have been writing for so long. People are wise to the manipulation, and when the price drops, it's very obvious it has little correlation to do with the physical metal, because we get no one calling to sell when that happens. Our phones generally light up from people bargain hunting and buying.
All right, thank you. Next question is from Matt. I live in Australia, and we have what's being called a two-speed economy because on one hand we have the mining sector ripping the metals out as fast as they can, and on the other hand they have normal people going about their normal lives and they don't benefit from it. I realize all countries will be affected, but I wonder how the coming adjustments to the world economy will affect countries like Australia that are not as vulnerable to dollar devaluation.
Right. Okay. This is Andy Hoffman. It's one of the most debated questions when we talk about currency devaluation is, what about, for instance, these commodity countries, let's say Canada and Australia, New Zealand, and then, of course, you have countries like China, which are supposedly immune because they have all the manufacturing capacity of the world and they have all the currency reserves, and therefore they can buy whatever they want. And the fact is, okay, the dollar, the U.S. dollar affects everything. I don't care if you're in Australia, if you're in Antarctica, or if you're in Europe. The euro is not the currency of the world. It's the dollar. Anything happens to the dollar, it affects the euro. Okay, that's why we're having inflation around the world. It's because, not because everyone else is printing money, it's because the Federal Reserve prints much more than everyone else. Countries like China are simply, and Japan are simply printing currency to keep up with the Federal Reserve because they want their currencies to devalue at the same pace so that they don't lose their manufacturing businesses. Most transactions are done in dollars, most currency reserves are done in dollars, and the monetary policy of the world is done in dollars. Now, if you live in Australia, of course you're going to be less susceptible to the overall problems, because Australia does have a more conservative balance sheet than say, the United States, and they do have a rich commodity-based economy as opposed to Europe and the States, which are so much financial services. But the fact is, you're going to see a decline in confidence in paper currencies. You're going to see inflation in Australia, and you're going to see it in Canada. And the only way that this is going to end is when the system, which is, again, it's a Ponzi scheme in its final stages, is rebooted. It will end, just like every commodity, every fiat currency scheme has ended. And you will see pain around the world, some places more than others, and you'll start all over again. And again, back to China. China's going to have bigger problems than anyone, because they've been printing so much money to keep up with the dollar, and they've used this centrally planned economy to spend money in the wrong places. They're going to, so when you have the dollar falling sharply, you're going to have an equal drop in China, and they're going to have 1.5 billion people that don't know what to do. So my advice to anyone is, if you're in Australia, for instance, be happy you're in Australia and not the United States, because there's less to lose, but everyone will lose, and that's why everyone needs to think about protecting themselves from when this happens.
Thank you. Next question is regarding exit strategies. If precious metal prices spike and the dollar is next to nil, how does one barter an ounce of gold, say for a tank of fuel? They'd rather not obviously cut up their 1 ounce coin. How do you see that playing out?
Right. Okay. Well, this is Andy Hoffman again. I get asked this quite a bit. The question, I guess, in simplest terms is, when do we sell? And my answer to that is, first of all, I can never know when we sell. It's not like a stock. It's not like we're looking to hit a certain point or a price-to-earnings multiple, or we're looking for the economy to change. What we are doing is we are realizing that gold is money. It's not like people who have money in the bank say, well, when do we trade in our dollars for gold? I mean, when is our cash savings worth too much? They don't. You just save in it, and that's the whole point of precious metals. They are money. You hold them as savings because you know that they won't lose value over time, like the dollar, the euro, the yen, the Australian dollar all have over the past decade. In fact, they all have over the past 40 years since there's been no gold standard. So now when you talk about specifically bartering, now you're talking about the actual end game, okay? And no one, Andy doesn't know, I don't know, no one knows. Eric Sprott doesn't know how things will happen in the big picture, because you could have a black swan event, you could have a hyperinflation, you could have a war, you could have some kind of reasonable slowdown where there's some kind of control over it. But if you do have a loss of control where you have hyperinflation, and it happens in multiple places, yeah, there probably will be food shortages, there'll be bartering, and that's why we all are thinking ahead as to, well, what might happen around here? What if there was, the price of gas here is $4 a gallon in the States. What if there was a war and with Iran, and it went to $10 a gallon? Or if people got scared of the dollar and it was $25 a gallon or $50 a gallon? What would I do? And the first question would be, the first answer would be, well, I'd want to have some gas on hand. And second would be, well, I'd want to have some precious metals in small denominations in case I needed to do that. And again, precious metals are only part of the equation, because when you're talking about a barter situation, you're talking about a social collapse of sorts, which could be temporary or it could be long-term. So again, please think of everything. If you're on this call, you're obviously already thinking about these things, but realize it's not just about buying coins. It's about thinking about what might happen when confidence in fiat currency fails.
I'd like to add to that, too, just from the nuts and bolts side of the equation. That's why we buy fractional coins. The U.S. Mint makes 1/2, 1/4, and 1/10 ounce gold eagles. So does the Canadian Mint with the maple leafs. Junk silver dimes and quarters. Every dollar face value, pre-65 dimes, quarters, or half dollars, any way you can make it, whether it be 4 quarters, 2 2 quarters and 5 dimes, a half dollar and 2 quarters. Anywhere you can make a dollar is 0.720 ounces of silver, roughly 3/4 of an ounce. You want to talk about something to barter with, that's where you barter with, or perhaps with silver eagles, which are very pretty, and everyone knows what they are, and it says 1 ounce of pure silver on it. All of the above being better than walking around in the barter environment with a 1 ounce gold coin. You'll get knocked over the head for that at that point. So I would think that you would want to use fractional gold coins, 1/10 quarter or half ounce, or junk silver or 1 ounce silver coins for bartering.
Right, and I'll add that if you're not experienced in buying precious metals, you definitely want to speak to a representative from a firm about the various premiums, because again, the most important thing if you're quote stacking is to be diversified, because obviously 1 ounce gold coins are great for storing value, but not as great for bartering. But you have to also realize that the lower the denomination, the higher the premium is going to be. You know, right now, there's, as Andy said, there's good availability, but those premiums also will rise for the fractionals as well as the 1 ounce coins. And in fact, they'll probably go up even faster during a period of fear because people start to think about bartering. So again, there's a lot of choices out there, and don't forget about junk silver, because that is the lowest denomination you're going to find.
Thank you. Next question is from Robert. The question is, if I store my silver and gold in a depository, what guarantees do I have, what protection do I have if the company ends up going broke, going into bankruptcy?
Did he say Dakota Depository or Delaware Depository?
Just any depository, really. It was more of a general question.
I mean, I can answer that from a standpoint of the only storage facility that I really know much about would be our Canadian facility in Montreal, Brinks. And although, you know, just using intuition, if you're in a storage facility and the storage facility, and that's their only business, and they run into problems financially, I could see that being a big issue. And in fact, I'm not going to mention any names, but there is a very prominent one in the industry that has been getting some bad publicity and some investigations by the FBI. So I don't know enough about it to comment, and I certainly don't want to get anyone nervous, but suffice it to say, I'll comment about Brinks, Montreal, because that's our storage facility. Partnering up with a third party like Brinks, Montreal has been a wonderful experience and should remove any issues because, number one, Brinks is a company that's been around for over 100 years. It has a enormous Lloyd's of London insurance policy. It's not a coin company or a vaulting service that's been open for a few years. It's if you're going to store, not only is it out of the country, but it's with the finest company, the finest facility I personally have ever been in. The facility, if you're claustrophobic, you won't do well walking into. It is heavily fortified, heavily guarded. And most importantly, it is a 100-year-plus company that is world-known, worldwide, and is financially stable. I guess the bottom line is it's always best to hold your gold and silver close to the vest and remove any and all counterparty risk. That's the best part about owning gold and silver, is that you can, whether you bury it in your backyard or keep it in a gun safe or hidden in the attic or wherever you decide to put it, it's yours. There is no counterparty risk. But if you are going to choose a vaulting service, with as much objectivity as I can offer you, our Brinks Montreal program is as good as it gets, because you're dealing with a company that has such a track record. And in this industry, I can't stress it enough, counterparty risk is huge, and in an industry that is not regulated, you need to work with companies that have good track records, that have good history, that have good reputations. And if you try to do things on the cheap, you're going to get bitten in the butt, I guarantee you. So in this industry, it applies more than maybe any. You get what you pay for. Now, that's all in degrees, but if trying to save $4 an ounce here or 30 cents an ounce in storage there is worth it to you, buyer beware. That's all I have to say. So, next question.
Yeah, and actually I'd like to add to that. You know, part of what I'm trying to do in my writing and what David Schectman has been doing for years is to change the thinking of people. I mentioned earlier that we have to think of gold as money. It's not an investment. And once you realize that, you realize it's the ounces that are more important than the price you're paying for them. Another thing is that people say all the time, well, I don't want to own gold because I'm scared to own it. You know, someone will steal it from me. And, you know, it's a mindset to realize that banks are more dangerous to hold your savings in than your own house. I mean, we saw what happened 3 years ago, and frankly, we're in the same position now. The only difference is there's been, you know, maybe 15 to $30 trillion printed to, you know, hold up these balance sheets for a couple of more months or years or whatever. But the fact is, people have lost tons of money in the bank. People have lost money in brokerages and MF Global at all kinds of places. In fact, there was just an MF Global in Japan which just happened, the same thing, and it was much larger. So I no longer believe that banks are safe. I don't have any money in the banks. And when people, a lot of people think, well, I can't own gold because I'm scared to have it at home. The fact is, I would bet that 95% of the people on earth that own precious metals hold it in their house or in some other safe place. Not a safety deposit box, not in the bank, but some place that they know where it is, that no one else knows. The best defense you can have for your gold is to not tell anyone where it is. And again, as Andy says, there are some cases where you really have to use a vault or a storage facility. If you have a lot, or there are dangers about your house or your high profile, that kind of thing. And if you do, then you do your due diligence. We've done our due diligence on the Montreal facility. We can't speak for other facilities. There are pros and cons of all of them. But again, the most important thing is to realize that this is your savings we're talking about. And you have to think long and hard about what your options are, about how you hold your savings and where you hold them. Because the mainstream wants you to think that holding dollars in Citibank is the way to go. And obviously that's been a losing strategy. And it will continue to be until the system goes down.
Thank you. Next question is from Greg. How devastating to the U.S. dollar is China when they're buying oil using gold instead of dollars?
It is devastating because probably the most important facet of the dollar's global demand is the fact that it's used in the majority of transactions around the world. If people stopped paying for commodities, mostly commodities we're talking about, with dollars, there would be less demand for them, and then there'd be higher inflation in the States, and and that would kind of be exported around the world. And what we're seeing now, for the first time in 30 or 40 years, when the United States basically strong-armed the world into the petrodollar standard, we are seeing other countries make agreements to sell things in currencies other than dollars, and gold for that matter. And the countries we're talking about are not piddly countries. China, India, we had this BRICS, which is China, India, Russia, Brazil, and South Africa. They had a big meeting 2 weeks ago where they decided to create over time alternative currencies, alternative pricing structures. The United States just tried to take Iran out of the global wiring system, out of the SWIFT system as a sanction, and a lot of these big countries have fought back and said, we're not going to listen to you. We're going to still buy our oil from Iran, and we're going to pay for it with Japanese yen, with Russian rubles, and with gold. And China, I believe, at the end of June, is going to start paying Iran gold for oil, which is an incredible statement against the U.S. dollar. And you're going to keep seeing the pot shots taken at the dollar until eventually the dollar crumbles, because everyone in the world knows that the dollar is overvalued. It's just kind of like a game of musical chairs where no one wants to be the one left standing with all the dollars, so they're all trying to get rid of them as carefully as possible. But there will be a torrent of selling at some point down the road.
Well said.
All right, next question. This question's from Dominic. What are your feelings about purchasing metals with a line of credit? If and when the hyperinflation hits, wouldn't it be favorable to purchase in this manner since you would be paying the amount outstanding in devalued dollars?
Well, I don't know that I would ever tell somebody to go into debt to do that, but I know a lot of people who have, and it's worked out. I mean, if you look at the fact that gold has risen on average every year by about 20% over the last decade, it would have been a winning proposition. This would be the one year where I'll question whether or not you win because it's an election year. But, you know, if you can afford to pay off the debt, fine. You know, it's cheap money right now. But to go into debt to buy something, that's a personal decision. Andy, I'll let you pick up from there. I would never personally recommend someone go into debt to buy gold and silver if they didn't have the means to pay off that debt if they had to.
Yeah, the reason that we're all here is because we're all generally conservative about our finances, and we're trying to protect ourselves. I mean, I write it every single day at the end of my piece, to protect yourself. And generally speaking, going into debt is the absolute opposite of protecting yourself. In fact, I learned today that mortgage is actually a French word that means death pledge. So I for one, am very much against taking out debt in almost every circumstance. But as Andy said, yes, it has worked in the past. It can work. I will say one thing: don't you dare anybody go onto margin to buy anything related to precious metals in the paper markets, and that would be, I mean, I'm against buying, personally against buying GLD or any mining stock anyway. But I don't care if you are, you know, if you're pro mining stock or not. Do not do anything with precious metals in the paper markets. At least if you were borrowing money to buy physical gold, the chances are it's not going to fall too much, and you'll be able to pay your debt back. That said, I am personally of the leaning that going into debt is a very dangerous thing, and if you do so, you know, a lot of bad things can happen.
Agreed.
Okay, thank you. Thank you. Next question is from Dan. Since JP Morgan is so corrupt, what is to prevent them from drawing on the SLV silver stockpile to depress the silver price?
Right. Well, I'll certainly take this one. The answer is they have been. They've been doing this for many years. That is why SLV was created. That's why GLD was created. They were created as ways to keep people from buying physical metal and to put it into unallocated paper that there's no way of knowing who owns what, and you certainly don't own it, even per the prospectus. I mean, if you look at the first few pages or the risk factors of the SLV or the GLP prospectus, you'll see that it says very clearly that they don't have to ever give it to you, and that they can send it out to custodians, they can short it, they can lease it, they can do all kinds of things. And it's our contention here in the in the manipulation world that fund SLV has been used for that very purpose. Over time, I believe what's going to happen is we're going to have some physical supply shortages, and then people are going to demand, because again, if you have SLV or GLD in large quantities, you are allowed to demand that metal. So what I believe is going to happen ultimately is you're going to see the kind of supply shortages that Andy was talking about earlier, be it on the downside if they smash paper silver, on the upside if it blasts through $50. And as a result, it'll, what is behind the SLV will come into question. So until that happens, it is always an issue, because I believe that they've gutted it, just like the U.S. Treasury has been gutted in suppressing the price of gold. And I believe in time all these things will come out. So, you just do your due diligence about how much of your assets you want to hold in precious metals and other asset classes, and you watch. And if you own ounces, it really doesn't matter. It's annoying when the price goes down, but if you own ounces and it's not on margin, you just wait it out, because ultimately we will, the demand is going to overwhelm whatever supply is there.
All right, thank you. Next question is from Robert. He's asking, please comment on how the Chinese Pan-Asian exchange may affect the COMEX and paper manipulation after opening this summer.
Right. Well, that's an easy one because they've canceled it. It was supposed to open several times, including the latest date was June. But apparently, from the way I've read it, essentially the U.S. government got into the system. In fact, they had one of the big bullion banks behind the scenes buy up 30 or 40% of the exchange, and then they basically used that leverage to cancel it. So there will be other competing exchanges over time, but the Pan-Asian exchange right now is not a factor.
Okay, thank you. The next question is from Steve. For the conservative investor with about $10,000 to invest in silver, would you recommend junk silver or silver eagles?
How much to spend? 10,000?
10,000.
I would probably do a little bit of both. I would maybe buy a quarter bag of junk silver, $250 face value, which would be somewhere in the $6,000 range, let's say, probably even less, maybe $5,500. And then I'd buy some 1-ounce silver eagles or some 1-ounce silver rounds or some 10-ounce bars. I mean, we can mix things up. It doesn't have to be either or. The least expensive way is junk silver. And but I think that the U.S. Mint will lose the ability to mass produce silver eagles, just like they have platinum eagles. Ultimately, they've already exhausted their, the United States has a strategic stockpile of silver, so the U.S. Mint has to go into the open market just to buy silver to make the silver eagles. If they lose the ability to mass produce silver eagles, like many think they will, and I do, the premium and the upside potential value of silver eagles will go through the roof. So I think you should have some junk, some silver eagles, maybe some 10-ounce bars. Look, there's no right or wrong answer to any of this. There's no established protocol for success. There's no set criteria one has to follow to accumulate gold and silver.
Yeah, I mean,
but I think that there's room for all of that stuff.
Right. Again, it comes down to personal preference about what you're most worried about, because the higher the denomination of coin or bar that you have, the less likely you're going to be able to barter with it. So it really depends on your mindset. If you are in it because you simply believe that the price is going to go up and you're holding your savings, that's, you want to get higher denomination things with lower premiums. But if you are worried about, apocalypse, you want to have more junk silver. So really it comes down to what you are most comfortable with.
Okay, thank you. Let's see. This question is from Ricardo. Do you believe the bottom in silver is in place, or is there an additional downside potential in this short term?
Right.
I'm sure we get this question a lot here.
Right. Well, I've certainly written about this topic ad nauseum. The fact is, obviously, in the paper world, you never know what the price will be. But again, every time the price has gone below $30 in the last 2 years, which would primarily be last September and December, we've had an absolutely enormous physical response. We also, again, I don't like to be into technical analysis, especially on these kind of calls, but I've certainly made it quite clear that I am completely against short-term analysis of charts because I think that they're manipulated. But those manipulations create massive long-term patterns. And right now, we are seeing an absolutely enormous base pattern in silver at the $30 level, just like we're seeing in gold at the $1,600 level. In fact, I've never seen basing patterns like this, these reverse head and shoulders. Actually, in euro gold, meaning gold priced in euros, you have this, what you call a pennant formation, that's now 8 months long, which is just an astronomically long period of time for such a powerfully bullish formation to form. I believe that, as a result of all the manipulations in the 2009 to 2010 area, that we created a sufficient support level at $20 per ounce silver. And personally, I believe that it's somewhere around $30 right now. especially given what happened to physical silver demand back in September and December when it went briefly below 30. So I don't know what will happen. I certainly know that the cartel will do everything they can to try to make it look that way. And if there is another global meltdown event, which frankly could happen any day, you look at Spain, look at Italy, you know, they will certainly try to make it happen. But if they did, I'll bet you will have the exact same issue as what happened in 2008, massive physical demand. So I can't say if you're looking to time it, you know, certainly in the paper market, that's a bigger concern, but we don't deal with the paper market. In the physical market, we think about where has silver been in the last, let's say, 2 years, what are the fundamentals, and what kind of supply response have we seen when we've gone below 30. So personally, I cannot believe there's much more here, certainly not on the physical side, but you know, that's why we watch the markets each day.
Okay, thank you. Next question is from Leslie, who is a 65-year-old retiree and has only been stacking for less than a year. Would like your thoughts about the percentage to save in precious metals. A lot of people are saying 100%. Other newsletter writers are out there saying less. Also thinking about 100% precious metals versus CDs in the bank. What are your thoughts about that?
You want me to take that, or do you want to take that, Andy?
All right, I guess I'll start with it. I mean, if you're talking about me personally, I've been 100% invested in the sector since 2002. I'm about 2 weeks away from my 10-year anniversary. I'm looking forward to it. But again, I have been converted over time to the kind of thinking, to the mindset change that I'm talking about here. I fully realize that precious metals are money. There's not 1 ounce of doubt in my mind that says, oh, actually they're an investment and I could get crushed on it. I mean, if I had mining stocks or I was holding GLD, that's another story, because you look up and your brokerage account is gone. I know my coins aren't going anywhere, so I don't think about it in those terms. I know that I am holding real money. I know that the physical coins have held their value for the last 5,000 years, and I know that they'll hold them, well, I can't say 5,000 years, but I can certainly say through our lifetimes they're going to be the real money. So how much? It really depends on how comfortable you are to you. I was going to say, you know, my wife still is scared to put money in the ATM machine, like a check, because she just can't get a level of comfort that they're not going to take it. And again, you have to get a level of comfort as to why you're holding precious metals. And the more you have a level of comfort, I suspect the more you'll feel comfortable holding higher percentages.
Yeah, I'd like to just throw my hat in the ring with that, too. Both my father and I, for the better part of 15-plus years, have both been completely and totally, nearly 100% invested in the sector. And so you'll never find owners of a company that are more, you know, vested in the interest of precious metals. I've never lost a minute's sleep being as strongly invested in or as strongly, as much, don't want to use the word invest because it's wrong, but let's just use it for the sake, as strongly invested in precious metals as I have been. And I personally think that diversification is a term used out of fiduciary responsibility to avoid being sued, and that's a term that was invented by financial advisories, because if you think of a broad diversified portfolio, a broadly diversified portfolio, it is sampling of various asset classes, many of which don't move in harmony, whether you're talking interest rates or commodities or securities or real estate or whatever sector you're talking, you'll rarely find more than 2 moving in unison. So you end up having some moving up and some moving down and some moving sideways, and you really never get anywhere. You become the best of the worst, or maybe the worst of the best, and you become mediocre. The way to succeed in investing, as Richard Russell has always said, is to first and foremost identify the primary trend. And I keep using the word investing, but I really don't mean that. I simply mean holding one's wealth or protecting one's wealth. You identify the primary trend. And the primary trend, or the way the river flows, to me, is of a falling dollar. And if you believe that the dollar is falling, then being invested in dollars or being denominated in dollars is a surefire recipe to go broke. And for that reason, the key to me was to diversify within the primary trend, not to be broadly diversified. For me, that meant some gold, some silver, some platinum, some palladium, along the way some mining shares, although I've sold almost all of my mining shares, along the way perhaps some agricultural ETFs or some foreign currencies. If you broadly diversify within the primary trend, you win. You don't have to be the poster child for Finance 101 to win. And I think, quite frankly, if you are in the mindset that the dollar is heading south, it's going to be a lonely existence. People won't want to hear what you have to say. You have to trust your gut. You have to trust your intuition. You have to trust guys like Andy Hoffman and Miles Franklin. And you have to take a big position opposite the dollar. And a big position for me meant everything, not only financially, but also I own a precious metals company. So I couldn't be more in agreement with you, Andy, about that. And so, you know, it's all about where you think the dollar is going in the long run.
And conversely, CDs at a bank would probably be my #1 worst investment choice, because not only do you get no interest on your money right now, literally no interest, but you have the risk that the bank will close and take your money.
Okay, thank you. Next question is from Billy, and he is asking why the consistent assault on silver and gold by the bankers this week in particular has been brutal.
Right. Well, I would say the past 10 years have been brutal, but I've created some, based on what I observed, some key inflection periods where I saw things change. The first period where I really saw a step up in the intensity was what I call D-Day, which was in it was November of 2010. That was when silver first came, almost touched $30 an ounce. And after that time, you know, what we had seen before became a lot more intense, including naked shorting of the mining shares, a higher frequency intensity of the PM attacks that you see almost every day now. And then, of course, we had this fall, okay, what I call global meltdown 2 is this summer, last summer, when the U.S. Government was downgraded, when gold hit its all-time high. The whole European crisis came into focus. After that time, it's been quite clear, this is now 7 or 8 months of the most intense attacks I've ever seen. And the obvious answer, I mean, it's not rocket science, is that the powers that be are terrified. I mean, Europe is much, much worse off than it was last summer. The U.S. debt, think about it. We had this big U.S. debt debacle last summer, okay, 8 months ago. That was when the U.S. debt was $14.2 trillion, okay? It's 15.7 now, and we're going to hit the 16.4 trillion limit, not at the election time like they thought, by around September. So we're going to go through this again, $2 trillion more in the hole, with an annual deficit, record deficit of about 1.5 to 2 trillion, depending on, you know, how you account for it. So the fact is, things are getting much, much worse everywhere, and now it includes China, which is clearly in, you know, they may report 8% GDP growth, but everyone knows that they have a collapsing real estate bubble and they're in recession. Japan is a basket case, and of course, you know, there are countries, big countries like Spain and Italy, which are on the cusp of collapse right now. So what you're seeing is just heightened attacks on precious metals. I've never seen anything like it. It's every single day. But the fact is, like Andy said about not losing sleep for all the time holding the coins, I lost a lot of sleep for a lot of years owning mining shares. But now that I'm owning the coins, I don't lose a second of sleep over it. I sleep better than ever because I know what's going to happen. I know that Japan, that China, that Europe, that the United States are all going to go into major, major recessions and depressions if they're not there already. And I know that there's going to be major inflation because the only thing that the governments can do is to print more money. There is no other choice.
Yeah, and I just want to add one little footnote to that. You know, Andy Andy can throw out a lot of information quickly and talking about just how big these problems really are and how fast we're blowing through the debt ceiling and adding another $2 trillion. Stop and think for one moment just how big a trillion is. A trillion seconds ago was 31,688 years ago. So when you talk about how fast that money is being created, you try to count to a trillion, it would only take you nearly 32,000 years. So it puts things into perspective and adds a little more certainty to an already mathematic probability that the game's already over. So that's why I'm strongly invested in gold and silver, or have as much gold and silver as a portion of my net worth as I do.
And I believe that aside from a black swan event of sorts, I believe what's going to truly change the public's opinions about gold as money is when the debt starts to go from this kind of exponential increase that we're talking about here to the hyperbolic increase. When all of a sudden it's not 16 trillion, it's 20 trillion, and everyone's looking at 25 trillion. I mean, this is what's going to happen soon. And again, the government's printing money to keep interest rates down at zero under these circumstances. We're talking about every 1% increase in the interest rate will add $400 billion to the U.S. deficit. That's how fragile the situation is, and that's why I cannot believe it could go much longer, because the only recourse that governments have right now is to print money. They can't have austerity. Are you kidding me? If they stopped for 1 minute, heck, if they stopped manipulating gold for 1 day, you would see the results. That's how fragile the system is right now.
Okay, thank you. I believe we have one last question here. What would you recommend for a young person with a steady income but no savings and debt still to pay off, mortgage and student loans? What would you recommend they do? What strategies should they use to invest?
Right. Well, again, I think we all agree that debt can be dangerous, especially if you're, it's one thing if you have a high net worth and you do have other resources to take from to pay your debts back. So, I wowould say first and foremost, keeping your debt as low as possible is something to do. Because again, if you take your little resources and put them into gold, and then you have to pay off these debts, you never know what the price of gold may be at any given time. So, I mean, I'd like to say diversify, but I'm a firm believer. I learned it from my parents that debt is dangerous, and if you can be debt-free, you're going to be in the great minority of people in this world, particularly in the United States.
Agreed.
Okay, and actually, one topic that we haven't brought up, and we'll use this as our last question, I believe. What about platinum or other metals as opposed to gold and silver? We've been talking a lot about gold and silver, but what about platinum or palladium even?
Well, I think that platinum and palladium, especially platinum, at these price levels is really an amazing value. If you look at the last 50 years, generally speaking, platinum has been anywhere from $80 to $100 more per ounce than gold, always. A couple of years ago, platinum was $2,000 and gold was $1,000. Platinum
is about a 20% premium on average.
Yeah, and I don't know if platinum's about 10,000 times more rare than gold in the earth. It's interesting. Here's a prime example of where I think things are going, and it's kind of a good way to end things, because as I've said before, this will be a market identified or defined in two respects, ultimately by rising prices, but also by lack of availability and rising premiums. And platinum is a perfect example. Here we have a metal that is just getting creamed and is screaming from a technical standpoint, buy me, because I'm cheaper than gold and I am much rarer than gold, and I generally am more sought after and more expensive than gold. Why won't you buy me? Yet, since 2008, the U.S. Mint has not made a silver eagle. A platinum eagle. They've made some proof coins, and in a nutshell, the difference between a proof coin and a commercial strike coin, they're the same piece of platinum, except on a proof coin, it's polished under an industrial buffer and then stamped 3 times for definition and put in a velvet box and sold at double or triple the cost of a normal 1-ounce Platinum Eagle. The Canadian Mint this year, and they've really been sparse at sending them out. I think they made 25 or 50,000, and that was it. They're gone. You can't find them. The Australian Mint, the last 2 years in a row, made 30,000 Platinum Platypus. That's it. We're finding that the lower the price goes, the more impossible it is to get the coin, the longer the delivery delay if you do get it, and the higher the premium. So I do think it should be owned. I think one thing to bear in mind is that when the world thinks of preservation and protection, they don't think of platinum, they think of gold. Platinum does not have the historical track record for wealth and for savings and for protection from difficult times that gold does, but it certainly is a screaming buy if you can get the product. And so I think it should be a minority position. Palladium as well, if you realize that platinum and palladium are the key ingredients to catalytic converters, and a couple 100 million new cars going on the road in China and India in the coming years, the need for catalytics is real. And with palladium being so inexpensive, in fact, there were a few years ago when Ford Motor Company jumped into the foray into the futures market and pushed the price up to over $1,200 an ounce. So I like both metals, but to me, I wouldn't have them be more than 10 or 15% of my portfolio.
Yeah, to me, they're, as Andy says, more of a diversification than anything. You know, some people say, well, in the worst case, if there was some kind of ban of gold or something like that, or confiscation, the odds are that they couldn't touch platinum because no one even owns it, let alone thinks about it in that manner. Although it does have kind of an aura of precious metalness that lacks that's not there. Like in gold and silver. So again, it's, as Andy said, it's really a diversification more than anything, particularly platinum, which does trade cheaply right now.
Okay, thank you. Do either of you have any closing comments for our listeners out there?
Well, I do. I don't know about you, Andy. My closing comments would just be to, first of all, thank you for people that are reading our information, that are giving us an opportunity to work with them. We have been in business proudly for 22 years. We've done over $3 billion in sales. We've maintained an A+ rating with the Better Business Bureau. And no matter who you call in this industry that talks about or promotes precious metals, they've heard of us, and I guarantee you they have something good to say about us. And that's because the single most important thing that we strive for at Miles Franklin is honesty and integrity and to treat people the right way. And so as the owner of the company, that is my guarantee to you. Give us an opportunity to work with you. You won't be sorry. We'll always compete, even with the big boys that are selling things very inexpensively. We'd like to consider ourselves a big boy too, but that gives you first-class service, that gives you accessibility, and that will build a relationship with you. Because where this is going, I think relationships will be very, very, very important when product starts to become hard to get, rather than just a login number on a website. So we still do things the old-fashioned way, yet we offer the big boy prices. So give us a shot, call us up, continue to read our material, pass it on to those who are interested, and know that you'll always be treated fairly and with respect at Miles Franklin.
And from my perspective, my job here as Director of Marketing is to communicate with the public. I answer all emails expediently. I take all phone calls. My job is to educate people, not necessarily to sell, but to help them to understand what this industry is about. So please email me, call me at any time.
All right, thank you very much to our listeners out there. If you would like to call us, feel free to call us at 800-822-8080 and visit our website at www.milesfranklin.com. Thank you all.